Right, jet setters. So the 17th and 18th of the month is coming up this weekend. And the reason why that's of interest is a while ago I was looking at these moves in the market, like that one, this one, this one, and this one. And trying to work out what's going on those days. And when I looked at them more closely, I realised there was a pattern in that there was selling happening on the 17th and the 18th of each month. And then on the 19th, the selling was gone and the buying came in and they sprung back. Okay? And it had been happening in May, in June, okay, in July, in August, and I hypothesised that it was going to happen in September. And of course, it did happen in September. And that the selling had a couple of things of interest in it, in that at the time, I said I'll post a video. It was on the 10th of September, I think, that I posted the video. In that the selling was interesting because it took the market below the 20-day average and hit the 50. Below the 20, hit the 50. Below the 20, hit the 50. Below the 20, almost hit the 50. And I again hypothesised that when it would happen in September, which it did, it would cause a bit more of a ruckus because the market was already teetering on this line. You can see it, that's the 16th, right? And then the 17th happens and it drops below. And again, the market recovered as it had on all these previous occasions, but the ramifications have carried on, and really we've been in a sideways chop ever since. There's been, I guess, like a trend going down here, which has been broken last night, arguably, well, clearly on this, the way I've drawn this line, but really it hasn't regained the lost ground from where it broke down just yet, or where it came back to, which is this 44.70, 44.80 mark. So I'm going to look at these ones in a bit more detail, just so I can show you how clearly those time zones pan out, because this pattern has happened for the last 5 months. Lightning doesn't strike in the same place twice, but when it strikes 1, 2, 3, 4, 5 times in the same place, there's a good chance it's going to happen the 6th time. So if we go back to May, right, this is a 15-minute chart. So we can see in May, and this is the times down the bottom here. These are Australian times, so you just have to bear with me with some of the translations. But this is you can see that's the close of trade on the 15th, that's a Saturday morning, I think, like our time. But then when it opens up on the 17th, so 11:30 at night, that's the Monday the 17th in the US. And then for the next 2 trading sessions, these are the 2 trading sessions, next 2 days, the market tanks 3%. Okay, and when it finishes on, you can see at the bottom there, it says the 19th of May at 5:45. So that's the close of business on the 18th in the US. And then when it ticks over to the next day, all right, which in our time zone in Australia is 11:30 at night on the 19th, that's the start of trading on the 19th. So you can see over the 17th and the 18th in the US, there's a lot of selling, down 3%. As soon as that session is over, it comes screaming back, right? That was May. When we look in June, it wasn't as big, right? But it was still noticeable, as you can remember from the other chart. It's down 1.6%. Okay, and in June, the 17th and the 18th, trading days were a Thursday and a Friday. So that's, you can see at the bottom, that's the 17th of June at 11:30 at night in Australia. So that's the morning, that's the opening of the 17th of June. 1 day, 2 day finishes on the 18th. So that's Saturday the 19th at 5:45 a.m. So that's the close of trading on the 18th in the US. And then on the Monday, it's all off to the races and away we go. Right? So that was June. When we look at July, now this is 4 days because it was over a weekend. As in the 17th and the 18th was the Saturday and the Sunday. So the good business day before, which was the 16th, and then the Monday, which is the 19th, big selling, big gap there, and then when it finished, off to the races on the next business day. That was June, right? Then in July, come up, we can see the similar thing. 2 days was a 2.5% move, and that was on a Tuesday and a Wednesday. Sorry, in August, that was a Tuesday and a Wednesday in August. And again, that's the 17th when it starts. So the 17th, 11:30 at night. That in Australia time, that's the morning of the 17th US time. Goes through the 17th, goes to the 18th, and on the 19th, it's off to the races, away we go. That was August, right? And then when we come through to September, here we go. In September, the 18th, the 17th and the 18th, the 17th was a Friday, and the 18th was a Saturday. So the trading days around that was Friday the 17th, so it's the Friday the 17th, and Monday the 20th. And then we can see Monday on Tuesday the 21st, it all came back. Okay? So that's what happened on all those days, all 5 of them. Okay, and you can see that they are reasonable pullbacks. I mean, this one's a little different because it had one beforehand, but it was still on those days. And some of them have like a little bit more of a lead up than others, you know, but really it is those 2 business days where the main action happens and is consistent along with those patterns. Now, the thing that is interesting, of course, is this, well, today, Friday, is the 15th. Then there's the 16th and the 17th is Saturday and Sunday. The 18th is Monday. So if my hypothesis is correct, and it was prior to the September one, that there is a seller that comes in on the 17th and the 18th, then that could be, they could bring it forward to Friday the 15th and Monday the 18th, or it could be Monday the 18th and Tuesday the 19th. So this is the Friday session, that's the Monday session, that's the Tuesday session we've got in here. But if I am correct, then we are looking for a correction of somewhere in this vicinity, sort of around about, say, 3%, 3.5%. You know, so 3.5% takes us to here, maybe that. Let's just bring that down a bit, which takes us right onto those previous lows, which is interesting. 3%, 3% would obviously take us not near that, but it would take us to that previous low from where we are today. So that is why I'm pretty cautious in terms of the price action, and why one of the reasons why I'm staying short for now. These levels obviously haven't kind of broken those previous highs, like those highs. It hasn't come back and busted that, so until it does that, I'm still short. But as I said, lightning has struck on the same dates 1, 2, 3, 4, 5 times. To me, it would be very interesting if it happens a 6th time. I think the chances have got to be on the cards. And now these things, they don't correspond to option expiries, right? They are the 17th and 18th trading days, which was a Monday and a Tuesday in May, a Thursday and a Friday in June, a Friday and Monday in July, a Tuesday and a Wednesday in August, and a Friday and Monday in September, and will be either a Friday and a Monday or a Monday and Tuesday in October. They're not linked to economic data, and they only happen on those days for the last few months. So this one, that was like the 24th, that one was the 3rd, this one was the 28th, this one, around about the 23rd, this one was the 3rd. None of these pullbacks have happened on the same dates, like 1, 2, 3, 4, 5. I've been in the markets for close to 30 years. I've never seen anything like this. never. And the only thing that I have reservations about on this is when I looked at the volumes for these days, there's no big tell. There's no big volume spike. I've looked at other markets to see whether this is happening in the S&P on the back of other markets, like action in the Dow, the IWM, the NASDAQ, dollar index, the treasuries, commodities. Haven't seen any correlation there. This seems to be very specific to the S&P. The volumes don't show up my hypothesis that there is a significant seller having an investment meeting on the 15th, speak to their trading room on the 16th, say go and you've got 2 days to do your order. They do over the 17th and 18th, and then they're out and everything springs back, right? But some of these funds could do these via derivatives, via swaps, off-market swaps, that you don't see the volumes coming through in the S&P per se. So there are a few loopholes there, but that is a reservation in my hypothesis. If there was a big correspondence in the volumes, then that would be very confirming to me of what's going on. But in any case, I can see that this trend, which has been going on and was recently broken, the lows are all around the 17th and 18th trading days, strong recovery on the 19th, and there is a good chance, I think, that it will happen again. I can't see why it wouldn't. If they've been rebalancing for these months, then this recent rally would be, they'd be licking their lips at that, to be selling into that. And 3% would do further, this 3.5% would do further technical damage, just as this one did. They have managed to achieve some technical damage in that it is clear we're in so far a sideways pattern after this correction. There is of course a trend that has been broken overnight, down kind of around in here, somewhere around about there, depending on where you want to line it up. So that downward trend has been broken to the upside. You can see that breakout, but this high has not been, sorry about that, this high up here hasn't been broken, and the levels at which it's kind of broken down and struggled, they have not been messed with yet. So I still see that the damage that's been done is still intact as far as the damage has been done and has not been undone. And I am very wary of the next 3 trading sessions to watch what would happen. I'd be very surprised if there is not a pullback in these, at least 2 out of the 3 of these sessions. As I said, because it's happened on the same sessions in the past 5 months. That's it. I've scoured the internet for this and I cannot find anyone else that's been talking about this in the same way. So either I'm a genius or I'm absolutely smoking crack. For what it's worth, it could be either, but I'm not a financial advisor. This is just for education, market commentary. This is my trading diary. If you're going to trade these markets, be very careful. They are risky. They can move suddenly. You can lose a lot of money. make sure you deal with a qualified financial advisor. My rationale for doing these is because I've seen too many basically kids, like babies, right? And some of the things they come up with on the markets are just ludicrous. As I said, I worked for an investment bank for over 20 years, running trading businesses, running trading books, complex derivatives, and 9 out of 10 of the people that I hear doing market commentaries and technical analysis, to me, they've never traded a serious risk book in their entire goddamn little lives. So the reason why is I'm not looking for your money. I don't offer training courses. I don't offer any investment services. This is basically because I'm primarily a musician these days, having retired 10 years ago. Gigs are dried up because of COVID, and I thought I'd do this to keep myself entertained. Anyway, I hope that's useful. Have a good one. Watch out for the next few trading days, and let's see what unfolds. Okay, ciao.